And, like with COVID-19, BlackRock anticipated the next downturn about a month before the repo market started going haywire and presented to central bankers, this is the policy you should implement during the next downturn.
What Whitney Webb is saying here is that BlackRock does have a very significant hand to play in all major policies around finance, especially within the US, but technically even globally. And in this video, I am going to be revealing the shocking truth about why BlackRock is here in such a large way, pushing Bitcoin, pushing this, pushing that, but also what their overall agenda actually is. Welcome to the channel, everyone. My name is Nick. For those that are new to the channel, hopefully by the end of this video, you do become a subscriber. Let's go over here, right? So here we have the Bitcoin ETF. Now, this is the actual text behind it. This is the full breakdown of it. And a lot of people, including, of course, Bitcoin maxis, overlook this. And if you actually read this, we have the transfers of Bitcoin from the trust trading balance to the Bitcoin trading counterparty's account at the prime execution agent or to the prime execution agent is an off-chain transaction that is recorded in the books and records of the prime execution agent. Now, it breaks this down on the bottom. It may not be funded with Bitcoin on trade date for the sale of Bitcoin in connection with the redemption order, when Bitcoin remains in the trust vault balance with the Bitcoin custodian at the point of intended execution of a sale of Bitcoin. This is very interesting. Okay, now what does this all mean? Well, this means that they can borrow Bitcoin from Coinbase to short and are not required to show any proof they hold one-to-one. There's also a 2 to 30 day settlement. All settlements are done in cash. Now, also over here, someone said, what about all of the on-chain transactions? Well, more than half of the wallets are spent and rotated through Coinbase hot wallets. Time to update the wallet list and remove all the old empty wallets. And yes, a lot of this is just on-chain manipulation. They make everyone believe that, oh, look it, these are major deposits. These are major deposits. It's all through hot wallets. It's all rotated through hot wallets to make it seem as though all of these massive amounts are being moved around and that the ETFs are seeing such a significant traction. It's crazy that this is actually ongoing. And this is all this is all paper Bitcoin, basically. And we even have here, BlackRock can take as much Bitcoin as they want from Coinbase and the transaction is recorded off-chain. I'd like to see all of the ETF wallets. And yeah, that's why when we really look at those wallets, okay, they are all, wash trading essentially. This is all through hot wallets. It's all funded through hot wallets that repeated transactions look as though they are legitimate. Now, recently, $10 trillion BlackRock presents Bitcoin at a conference in Brazil. The new marketing team is here. All these Bitcoin maxis continue to celebrate BlackRock. Oh, look at BlackRock's pumping Bitcoin again. Bitcoin through the lens of a global monetary alternative. And they're looking at this, right? And they're, comparing it to US Treasuries, gold. Why is BlackRock pushing Bitcoin? The number one thing that I want to ask everyone is, why should we trust BlackRock? Since when is it a good thing to hold BlackRock's hand and go down the path with them? I mean, it's just crazy to me that everyone has just forgotten who BlackRock really is. Now over here we have from Whitney Webb, she's really kind of sounding the alarm on this. Check this out.
And, like with COVID-19, BlackRock anticipated the next downturn about a month before the repo market started going haywire and presented to central bankers, this is the policy you should implement during the next downturn. And it's very possible that BlackRock is working on policy papers, for central bankers or other people in the US government about what policy should be implemented if, this type of crisis happens or that type of crisis happens. It seems like they seem to be designing the policies, I guess. And they've, had in the Biden administration over the past 4 years, they've been leading his former BlackRock executives have been leading his economic team, bringing us to where we are now, and likely what will influencing what will happen over the next couple of years, whenever or up until this crisis emerges. So it seems, you know, very likely that they'll be, dominating, fiscal response again. And then people, because they're not really aware of how this is developed, or really, there's just not a lot of media coverage about, for example, the role of BlackRock in the Biden administration, or in, on Kamala's economic team specifically. I've seen very little coverage, if any, of that. Recently, maybe a few blips here and there of when those people are appointed, but nothing significant beyond that. And then, of course, there was very little scrutiny of U.S. COVID fiscal response, I think, as well. And it's just sort of written off as this is what the government had to do to respond to the crisis in a lot of situations. But I don't think that's necessarily true, because, again, that fiscal response began well before, COVID was declared a pandemic by the World Health Organization, preceding that by like several months, right?
So as we really look at this, right, BlackRock is one to actually anticipate these crises. It's almost as if they are, leading us down the path to one. And remember that Larry Fink, CEO of BlackRock, was telling you that Bitcoin is a safety net for crises. Check this out.
I believe Bitcoin is legitimate. I'm not trying to say there's not misuses like everything else, but it is a legitimate financial instrument that allows you to have maybe uncorrelated, non-correlated type of returns. I believe it is an instrument that you invest in when you're more frightened, though. It is an instrument when you believe that countries are debasing their currency, debasing their currency by excess deficits, and some countries are. I believe we have countries where you're frightened of your everyday existence, and if you have an opportunity to invest in something that is outside your country's control, then you can have more financial control. And so I'm a major believer that there is a role for Bitcoin in portfolios. I believe.
So basically he's saying, it's something that you invest in when you're kind of scared, you don't know what's going to happen, there's a lot of uncertainty in the markets. Okay, interesting. So he's saying that you should be buying Bitcoin if you are expecting, something scary to happen. Guys, I want to show you guys real quick, Bitcoin back in 2020, that's right, when the COVID crisis hit. The last time I checked, Bitcoin was already kind of selling off a little bit, but it had a nice little impulsive move here. Bitcoin fell 63.2% in roughly 3 weeks. Okay, this is the S&P 500. You notice something very interesting there? Wait, hold on. He said it should be in portfolios for uncorrelated returns compared to stocks or so. Okay. But why do these two charts look so similar? Is it because, wait, it can't be, right? Bitcoin moves with the stock market? Yeah. This is exactly why when we hear a lot of these marketing pitches for, retail to flood into their ETF so that they can get richer, you really need to look beyond all of the hype and all the nonsense. Bitcoin is well correlated with the stock market. It follows the stock market closely. And this is the only time during Bitcoin's, time in the market that we've actually had a significant crisis, and we can see how well it held up. Now, imagine if we had the price data for 2008. Imagine if Bitcoin was around in 2008. I would love to see how the chart would have looked. In my opinion, it probably would have sold off just like the stock market did. But here we also have another clip from Whitney Webb. Listen closely to this, and then I want to talk to you guys about two additional things when it comes to Bitcoin and also the ETF custodians.
Because I think our current system, specifically as it relates to, the U.S. Treasury Department, has consistently been a revolving door for the last several decades with Wall Street. And like Goldman Sachs, for example, has had very significant Former Goldman Sachs executives have held very prominent roles at the Treasury when crises have emerged. So as an example, you have one of the top guys at Goldman Sachs, Robert Rubin, being a key figure in the Clinton administration's economic policy as Treasury Secretary, and helping engineer the repeal of Glass-Steagall, which creates, arguably the 2008 financial crisis when George W. Bush's Secretary Treasury at the time the crisis happens is Henry Paulson, another former top guy from Goldman Sachs, that allegedly told members of Congress if they didn't bail out the banks that martial law may be declared in the United States, for example. And then when the COVID fiscal response happened, Steve Mnuchin is a former top Goldman Sachs executive as well. So as far as, the big parties, Democrat and Republican, they tend to appoint people to Treasury that come from these top Wall Street banks that have a history of predatory and arguably criminal behavior. And so, I think there needs to be a much larger structural change, I guess, to prevent that type of revolving door policy if we're going to see any sort of meaningful fiscal response to a crisis that actually does take, the needs of regular Americans into account, because historically that is not what has happened. And the people that come to Treasury tend to have the best interest of Wall Street at heart and not the best interest of regular Americans at heart.
And this also shows you a side of the story that a lot of people just don't talk about when it comes to, names like BlackRock, right? Like, why would BlackRock want the retail sector to be rich? They profit the most off of you not being rich. But it's funny because this is all about Wall Street control. Okay, Wall Street now controls Bitcoin. A lot of people think that I'm crazy for saying that, but we have here, fun fact, BlackRock, MicroStrategy, and Grayscale each all own more Bitcoin than the US government. Okay, but if you actually look at the list of the top 13 Bitcoin holders, we have the top 13 own about 4.28 million, or 27.5% of the supply. Now, this was updated on October 2nd, and if you actually look at this, okay, we have Satoshi at the top, which you could argue it's the US government, but I'm not going to say that. We'll just keep Satoshi anonymous. We'll say it's some, rogue dev that, went off and created a digital currency to escape the monopoly banking system. All right, whatever. Binance, 4.32%, whatever. But here we start to see Wall Street. BlackRock, 2.36%. This number continues to grow. We also have Fidelity, okay, Wall Street again, 1.78%. Grayscale, also Wall Street technically, 1.67%. MicroStrategy, Wall Street, 1.62%. By the way, MicroStrategy, one of the largest shareholders, BlackRock, which I've outlined multiple times. And then beyond that, we also have Robinhood, 0.93%. And we can see that Wall Street holds 8.3% roughly. Now, I think that it's safe to assume that after roughly 10 months, BlackRock owning almost 5% of the Bitcoin supply is concerning, because that's after 10 months. Imagine what, 24 months from now, how much Bitcoin BlackRock will control and hold. I do think that at some point in time, very, very soon in the future, BlackRock will be one of the largest custodians of Bitcoin. And at that point in time, will we be looking at BlackRock's motives as, oh, this is very bullish for Bitcoin? Or are we going to look at that as, all right, now BlackRock controls all of crypto? Because remember, you control Bitcoin, you control the market. Why is that? Well, because of Bitcoin dominance. So when we think about what's going on here, if BlackRock controls fiscal policy in the US, why wouldn't they control fiscal policy even around crypto? Why wouldn't they control the markets around crypto as well? Well, that's exactly what they're trying to do. And by the way, Whitney Webb also talked about this as Bitcoin as a Trojan horse, essentially. Check this out.
As well, because most of them are, built, they're like ERC20 tokens, right, at the end of the day, and have that programmability functionality. And some, stablecoin issuers that are prominent, like Circle, openly talk about the programmability aspects of their stablecoin. And, they're in a very deep alliance with BlackRock Circle particularly. And Tether itself has made an alliance with the FBI and the Secret Service and, other aspects of the U.S. government to freeze wallets at the behest of the U.S. government, thereby making Tether sort of a soft extension of U.S. foreign and fiscal policy abroad as it relates to sanctions and other things. Some of which the U.S., of course, in the past has used to facilitate regime change operations and other things, not necessarily stop terrorism, as they are inclined to say. So it's important to keep that in mind. And, if you're allowing intelligence agencies, what the FBI technically is, to be onboarded onto your stablecoin, it's really not a private sector thing. It's a public-private partnership. And public-private partnership is the model that the U.S. and really most of the world essentially favors. And so, I think these stable coins offer that same kind of threat to financial freedom, or, easily could, were things to develop that way. And so, if programmability and surveillability is the threat to financial freedom, then we should not support that, right? And instead look for ways to build robust privacy tools on the base layer of Bitcoin, maybe, and try and make it something that's transactable, as opposed to this idea of having it be a storage or a technology for asset storage, as Larry Fink says, and something no one spends and people just hold, which is, what Larry Fink wants, and also, the way Bitcoin would be utilized in the framework that was laid out in the Trump speech at the conference.
And she is 100% true on this, right? Larry Fink wants you to just buy and hold Bitcoin. They don't want you to build anything on Bitcoin. They don't want Bitcoin to be this viable asset, because the second that it starts to become a viable asset, then yeah, the original view of Bitcoin starts to become true. But the problem is I feel as though it's too far gone. And I've talked about this on multiple occasions. When it comes to Bitcoin, the control aspect of Bitcoin has now been sacrificed for greed. Bitcoin maxis openly supported BlackRock in every single motive that they've had. They celebrate BlackRock even still today. And it's crazy to me that is the case, especially at a time where, we are starting to see CBDCs pushed heavily. We're starting to see, programmable currencies become a big deal. Yet we still are sacrificing control to Wall Street. And this is a big problem. And I feel as though it's just going to continue. And I think that BlackRock's next plans here is to become one of the largest Bitcoin custodians, control this market. And from that point on, we start to see regulations come into the space, maybe even strict regulations. And all of a sudden, the elites control this market, just like they've controlled, finance for years and years and years since the inception. So as we really think about this, I want you all to realize what's happening. I want you to wake up. Crypto is not, it's not the key that unlocks the door so that you can escape the system. This is going to be a part of the elite's financial system. They're going to control this, and they are going to get wealthier off of this, just like they did with traditional finance as well. So with that being said, I hope you guys enjoyed this video. If you guys did, definitely leave a like, subscribe, turn notifications on because more free content. You guys are more than welcome to follow me on Twitter and join the free Discord down in the description below. And with that being said, guys, it's been Nick. Thanks for watching. Peace out.